Welcome to part 3 of this series of videos about Hedge. And on this one, we're going to take a look at a strategy that won a bounty funded by dYdX that does exactly that. It uses Hummingbot client to automatically hedge your position on any spot exchange and create an opposing hedging position. If you don't know how Hedge works, what it is, and why you should use Hedge, especially when you are trying to market maker and do liquidity mining, take a look at part 1 and part 2, and there is a better theoretical explanation about what it is, how it works, and what it should use, right? And today we're going to take a look into things: how to install the strategy and how to configure and how it works in real time. The strategy I'm going to show you, the way you can access it right now is using Hummingbot on the development branch. That's where our code goes right before we put it into the main branch. On the next release, probably you already see it on the main branch, on the latest release. If you've seen this video after October, and probably we will be able to use this strategy directly on the main branch on the latest release. For now, to quickly show it, that running from Docker, when you go into create a new instance of Docker, all we have to do here is to add development. What Docker is going to do, let's call this instance as Hedge. Name of directories as usual. If you don't know exactly how to use Docker or want to use another kind of way to run the bots, take a look at the documentation. We have proper instructions how to use both on Docker and both on using the source code, right? Here what we're doing, we are creating the image. In a few minutes it will download the latest development branch and prepare, and we'll be ready to use it, right? So in this case, since I have already downloaded it, created an instance prior to this, you see that we are on the development version 0.45. So when 0.45 is properly released, this strategy is going to be on the main branch, and as with all the others, strategy that already exists, right? So as usual, create our own password, and here we have it. Just to make this video a bit faster, what you have to do as usual is to connect to the exchange, insert your API keys. We have a lot of different videos and documentation instructions about it. So I'm going to skip this a bit. I'm going to exit and be back in a few minutes, because I'm just going to copy my old operations from another bot just to make everything faster. Okay, so all my configuration files are loaded back on this instance. First thing first, right? So to run the strategy, you're going to need two things. One, a spot connector, and two, Perpetual connector. In this case, for this example, what I'm going to do is I'm going to use Binance as my spot connector and dYdX as my Perpetual connector, and I'll explain a bit why. Quick observation here, right? So along with the strategy that won the bounty, that the dYdX bounty, we also had a content bounty, right? So let me just it. Let me find it. Sorry about that, guys. If you go to YouTube and you look for dYdX Hummingbot and you find this video, this one is the winner of the content part of the bounty. So if you are looking to connect with dYdX and you still have some difficulty with it, this video is a great guide for you to understand what you have to do to connect your Hummingbot instance with dYdX, right? So make sure to take a look into the video to properly connect if you're going to use dYdX to Hedge. You might ask yourself why dYdX, and I'll give a small explanation later. But first, let's keep going on how to create this strategy, right? So as usual, when you type create, it will ask what's going to be your market making. Here's where you enter you find the hedge strategy, right? So you're going to create this strategy, and here come the usual questions. So as I was saying, you need a spot connector because the objective here is that you use the perpetual market to hedge and make your position to not suffer due to market price variation, right? So in this case, this will be really clear when the strategy starts. So in this case, we're going to use Binance, the list of assets to hedge on the ticket market. In this case, what's the asset we're going to use on the spot? So what I'm going to do is not BTC, but let's use the fun crypto. Let's use Dodge. And now we enter what's derivative connector, right? So any of the connectors that exist on that is already built at Hummingbot can be used as a derivative. And but for this case, I'm going to use the dYdX Perpetual, right? There is a small advantage that I'm going to show why it is a good idea to use dYdX as firstly as a way to hedge your trades. And here on the dYdX, we need to know what's the market. Okay, so we on the Perpetual need to know what's the market we're going to execute the hedge. So in this case, we're doing Dodge, and on dYdX, let me just check here. It's Dodge USD, right? So we're going to enter here is Dodge USD. How often do you want to check the hedge? And this question, what the bot is asking, the strategy is asking here, is that in how many seconds do you want the bot to check what's your balance and if you need to execute the hedge or not to keep your balance, to keep your full balance hedge, right? So let's keep this at 1 second to make this very quick. And what's the ratio? This is an interesting part of this strategy because you can choose if you want to do this hedge 100% of your spot balance, or you can make half a hedge, right? So you can like only 50% of the hedge. That what should use, it varies a lot depending on what is your plan with the hedge, right? So it depends a bit, but on this case, let's do one that will be equal to 100% of the balance that's going to be hedged. And where's the last enter? Here we go. Okay, so in leverage, it's the usual, and as we mentioned on the part 2 of the series, always be careful with how much hedge you use. So if you use too much leverage to execute it, it's very likely you have a higher chance to being liquidated when it happens, when something weird on the market happens, like some whiplash on the price, some quick move that it's not that uncommon on cryptocurrency market. So make sure that you properly use the leverage that you can, so don't incur the risk. Take a look again at the part 2 where I explain a bit more about what are the risks related to use the hedge, but let's use 10 for now. And max order age is that since we are creating orders on the hedge, what happens is that the market could move a bit. It's one of the other risks that's going to be the operational risk, where the moment you create the order, the price move it, and that order is not filled anymore. I mean, the current market price is already away from the point where you wanted to execute the buy or the sell in the case. So how long do you want to keep that order on the book until it tries again? So let's make it 60 seconds. And max slippage, basically slippage in a quick explanation is what's the error margin that you want to use to create your orders, right? So the bigger the slippage, the more likely it is that your order will be filled, but it also increases the risk that you're going to be paying a higher price to execute the order. So slippage, it's also part of the risk of the execution risk. So make sure you add something here that we are comfortable with. Minimum trade size to hedge the assets. So what's the minimum value that you want to execute your order? So let's keep it at 10. And here, as usual, you add your name. So let's name this one as Hedge. and we wait a bit. Strategy is being saved. Okay, where is it? Come on, 3, 2, 1. A bit slow today. Now let's take a look. What do we have in the config, right? So everything we entered on the build the strategy are here, strategy configurations, right? So you can directly change as usual with the config, slippage, with zero weight. So you can always change your configuration and test again as usual. Now let's see how this works. Let's start it to see what happens, right? And it will connect, it will check for the order book, and as you can see, it's saying that markets are ready, trading started, but no order was executed, right? What the bot exactly is doing, it is looking at my spot exchange, checking what is the balance, and if there is difference here, if I have balance on the asset that I'm trading, it will execute a short position on the perpetual market. So let's take a look at this in practical sense, how this works, right? So let me just show you here. So we now have here Binance. As you can see, take a look, keep an eye here into the log file. It's going to show a bit what's happening. And here we also appears. And let's take a look at dYdX. Here we can see there is no position open. I don't have dodge on my spot, and I don't have any short position, right? Now let's take a look what happens. As you can see here, my dodge is 0, and let's take a look if what happens when I buy 200 dodge here, right? Buy dodge, execute, order executed. Take a look and see what happens here. Created order type, right? If you check here on the dYdX, you see that there is another open, right? And it was executed. So it's the same amount of the trade history of the amount I bought, right? So I bought 200 dodge here, and at the same moment when the bot went through the cycle to check what's the balance on the spot connector, what it did is that it created a short position here, right? So let's just check something, right? So a few interesting things. I bought at 0.23 and my short is at 0.22. So there is a small difference here, a small gap, that in this case I'm taking a small loss here on this hedge. So we can consider this as a cost to doing this automated hedge. But the important thing is that at this point, doesn't matter where the price goes, I won't be gaining or losing anything on the total value of my inventory, right? So it doesn't matter if the price goes up here on the spot, I won't be losing, because everything I win, I take as a profit here, I'll be losing here, right? And if the price goes down, anything that I lose here on the spot, I'll be gaining here on the perpetual, right? So there is this zero price variation state. Back to the strategy, just quick demonstration. So let's say if I come here and I sell 100 dodge, the market price, I execute it, my sell happened here. You can see here that I sold 100 dodge. The bot's taking a look, tracking. There is a small detail here, right? So yeah, there is a small difference. Let me just execute the other 100. And here we go. It filled another 190, right? So the execution isn't 100% perfect, because there is a few small difference about the minimum that you can trade on the dYdX. Few things that if you're looking to use this strategy, you have to try around just to see what are these small differences. But in a general sense, this is a great starting point to execute your head automatically. Okay, so what I'm gonna do here, so you guys can see how this dynamic works from the market maker perspective. On the top here, we have the hedge strategy, right? With the dodge pair, as we set up early. So let's start it. Since I don't have any balance of dodge on my spot exchange, nothing will happen, correct? So, and here on the down window, on this instance of the bot, what I did is that I created a market maker bot, okay, and with the dodge USDT pair, and a really small bid spread, so you can have this order being filled pretty quickly. My hedge bot is running, and let's start the market making bot to see what happens. Right, here it is. So let's start the market making bot. And you can see here, minus order created. Let's wait it to be taken. It won't take much longer. Oh, hold on, let me just stop here. Let me just do something. I'm going to change the order size, other amount, to 200, because there's no small issue here on the execution. The minimum of the dYdX is 100 dodge. So if I put this to close, there might be some small differences that it won't be possible to execute due to the minimum position size on the dYdX. So these are small things that you need to take a look before you run this using your funds, right? So back to demonstration, order amount 200, and let's start it. You can see here on Binance, order will be created. Let's wait a bit for it to be taken. Pretty close now, right? So come on, someone take this order. Right, let's wait a bit. So as we go, you can see here we have another is pretty close to being executed, and my hedge on the other hand still here awaiting something, right? So yeah, as the order executed, and as you can see here on the dYdX, the same moment 200 short position was open, right? So again, as I explained before, I'm totally neutral here, right? So why does matter on the market making side? Two things. If your main goal is to enjoy take as much as possible the liquidity mining rewards, and you don't want to be exposed to the price movements, this is a great way to reduce your risk, right? Because what happens is that every time a market maker order your market maker order is taken, you are executing a hedge on the opposite side, and you are market neutral, and you don't lose any value if no matter what the price direction, right? So inventory price, your inventory value is locked up, and all you do, you have another position, and your all going to receive is going to be the rewards from that, right? So you won't be affected by price change. And now back to why use the dYdX, right? So this is a quick tip, is that if you guys remember, if you have been following crypto news lately, a few months ago, dYdX just did distribution and launched their own tokens. What is interesting here is that if you use dYdX to hedge your position, what effectively you're doing, you're also going to receive dYdX tokens for hedging your position. So picture this, you are market making, capturing the market spreads, right? You are capturing the liquidity mining rewards, and at the same time, you are also getting rewarded with the dYdX token. So here is a small trick that anyone that's trying to do this market making should look after, is where are these opportunities, right? Because if the goal as a market maker is to exactly to capture spread, low risk, and try to get as much reward as possible, it's really interesting and important that you always keep an eye out for these kind of opportunities, right? So the dYdX currently have this token distribution. You pair it with the Hummingbot liquidity mining, so you're kind of getting rewarded twice for providing a market making and reducing your risk on the markets at the same time. Look around from time to time, there's always this kind of prizes, competitions, and token distributions, and a lot of stuff that happens where you can take advantage as a market maker to reduce your risk and at the same time get these kind of rewards based on your trading activity. As a final note, always try to understand what are the risks involved, right? Because the objective here is to reduce your risk, but as we are doing this, what happens is that there's some new risks that are introduced. Like we mentioned, the execution risk, the strategy you're using might not be optimized to execute the hedge at the right price. So always go a bit deeper on these kind of risks that you are taking. So make sure that you build your whole market making strategy, considering everything that's aggregated to the whole package, not only what you can gain, but also what you can lose. And just to close it up, as always, nothing I said here is exactly financial advice. So make sure to learn, take your time to study how market works, what a market maker does, how a market maker makes money, and what are the possible instruments to reduce risks, and build your strategy based on what you learn, right? So it's, as a personal experience, I would say that it's more important for you to understand why you're doing what you're doing than take something that is someone saying it work, it's perfect, and you won't lose money. So think for yourself, learn. Most importantly, learn what's behind everything. And as always, keep a good eye for all the opportunities that are always appearing on the crypto markets. That's it for now. With this one, we close our Hedge series, and let us know if you like it, this series, and what other topics would everyone like for us to cover on videos or on blog posts. Bye everyone, and happy trading, happy market making. Be safe and learn about the risks. See you all.